What's up, guys? Welcome to another video from RT Trading. This is where we get into the facts and info of what it takes to be truly successful without any of the hype or flash. In this video, very simply, we're going to be going over what I think are top 10, 11 ideas for next week going into what looks like a possible rally here. And I also want to go over, and I'm going to do it at the end of this, all the Chinese names that got hit, and what levels you should be looking at, and what tools you can use to determine where you are in that stage with the stock. So as always, let's just jump right into it. And what we're doing here is timely, so consider subscribing to the channel and clicking notifications. For those that have been following for a while, they've done quite well with the with some of the moves, and we've seen that with like the NFT video that came out last week. There were a couple 100% movers in there. So let's just get right into this. I'm going to keep the blue background for now. Seems to be a huge hit with the emails that I'm getting and the comments I'm getting on YouTube and Twitter. So we're just going to keep that for now. If someone has an issue with it, or you think it doesn't read better on your mobile or on your computer, just let me know. So what we're going to do is we're going to see a theme here, and I want to just address what's going on here. If you saw what happened in the news on Friday, you had NIO get absolutely hit. And this is NIO. And for those that are living under a rock, it's an EV company. And you can see what happened here. It's just gotten decimated. I mean, from here, right, from here to here, what are we down? I mean, you're down 46% in a month and 2 weeks, right? Like, it's just not good. And we need to hold here or we're going to break. But just to get to the underlying issue, price always tells you when something's wrong. We just don't know what's wrong yet. And this really told you what was going on. Now you got this ugly H. They're having a shipping or a semiconductor problem, and they can't get their product to manufacture. So they actually take a 5-day hiatus. Now, if you think this isn't going to go across the board to all these other companies, it is. It's going to hit all the EV makers, and if it hits all the EV makers, okay, who's going to benefit from that? Well, you have a chip shortage. What do you need to do? Right? This is not going to be a rocket science kind of meeting. You need to make more chips. Okay? Who do you go to do things like that? Right? And I'm going to show this index as well. You go to chip manufacturers. Okay? And that's exactly what you're seeing happen here. And that's going to be a common theme today. There's more industries, but this is really a common theme that we're starting to see. Look at this volume that came in. Okay, this is your 30-day average volume line. That's what I use. Okay, here's 1 million. Okay, you are at double here on a move in a really bad tape. And what's important about this bar is the following. You opened right here, right at the low of the day, and you closed at the high. That's just consistent buying all day. There's one thing that you just need to be aware of here is that you have this trend that's right here. And as always, you can just clone these lines so you have them, right? And then you just pull them down and you see where they fit. And you can see that you're right around here. You have a little bit of a channel. But let me just get that out of the way for a moment because I want to get into this, what's going on here. So here you come in, right? You form your falling wedge. You break your falling wedge. This is a falling wedge right here. You break your falling wedge. You go below the 50-day. Everybody thinks it's over. And one of the guys asked me in the comments the other day, does it matter if you undercut? Does it matter if you undercut for a double bottom? You need to undercut for a true double bottom. Doesn't mean it's not going to bounce, but for a technical double bottom, you need it to undercut. And here's why. Okay, when you undercut, when you truly undercut like you did here, right, from this bar, what that does is it shakes the people out that bought here and flushes them out. So basically, all these bars is human nature. It's human behavior. That's all we're trading. So when they get flushed out here, and then let's get rid of these so you can understand this, because it's an important concept to grasp. So these people open here, think I'm okay, I opened a little higher, and then you flush down. They get stopped out because most people will have that as their stop, especially if they bought it under the 50-day. They're already nervous because they know under the 50-day means this is the last bastion. And nobody wants to go for that ride from 500 to 440, right? So once you flip here and you start bumping your head, people are like, oh, I need to pay attention to this. So the people that got out here or got stopped out there okay, all of a sudden they have to buy, and that volume all dried up. Now look at this. Look at exactly what I'm talking about here. You can see it from this line. See how we spike here on the selling? See how it dries up? You can actually even draw a trend line on your volume where you can see it. And this is where the volume kicked in and went to above average. And what day was that? That was the day it flipped to 50. So everybody's watching this and going, I can't believe I'm out here. It flipped to 50. I have to get back in. It does the undercut on this little channel, and then it goes from there. Now with this kind of breakout, this is going to be, because you have to understand, when you do semiconductor manufacturing, these cycles on semiconductor manufacturers, they're 12, 18 months out. They are not 2 to 3 weeks. Now, breaking this, okay, and on top of that, that's going to draw it here on the weekly too, so you can see it. When you flip this, okay, and you break above this, as everybody knows from me talking about these before, when you flip these, you're going to see a massive move higher. So that's what we're looking for. We're looking to flip this channel. And if you overlay something like Bollinger Bands, which I'm going to do also when I go through all the Chinese trades today at the end of this video and what transpired there and where there might be some buying opportunities, you can see how you're bumping into this. But once you flip this area, and it's hard to see on the blue, but let's flip this to white real quick. So see how you're butting right around there? Once you push there, these will widen, these bands will widen. And then you'll wind up having a nice push out of that. So that's a key level, and that's one of the first ones I would really watch. And you saw that strength the other day. In the same exact space, Lam Research, and we're just going to walk through this on the daily first. And let's get rid of this. So you don't have the same kind of move here, but you're above the 50-day, and you're setting up for the same kind of move. And here's why. This actually has more potential before it gets to the upper trend line. So I'll say that again. This has more potential before it gets to the upper trend. I mean, here's your first upper trend line, right? Which would put you, by the time it gets there, at like 675. So there's 100 points here, and I'm still in the channel. Now, what's interesting about this is pretty classic stuff, right? You have your double bottom here under the 50-day like the other one. But see how you kept riding this 50-day and it couldn't make a decision? Well, Friday, we opened on it and we closed over the 583. And now we'll get rid of this line so that you can see this level, because this is a key level. I mean, this is really, and what we want is we want the high of that bar, okay? You want the high of the green bar. So what you're seeing here is the 583.06, and where we close above, 584.23. So technically this triggered, and you can see, like, this is no good anymore. We'll get rid of this. Technically you can see that you still are in a base, but you're breaking out of that base. Now we've done it 1, 2, 3, 4, 5 times and rejected. Chances are, with the way the volume came in right now, this is not going to reject again. Triple tops, 1, 2, 3, are extremely rare. So this is setting up for a huge pitch. And just to show on the daily, so you can take a look at the longer trend, look at this longer trend. I mean, this has plenty of room, plenty of room. Now let's go drill down on it on a weekly. And you can see how you're just bouncing around right in here, right? But you have this weekly wedge, and now you have an outside week, and you could head right to the top of this, this area up here. So there's plenty of room for this to run. In the same space, semiconductors manufacturing, KLAC, and let's just go to the daily first, okay? We had this drawn from before when I was looking at it, and let's throw in the 21 as well, and the 5 and the 8. And you can see how they're all consolidating here, and then we broke above them all, and the 5 and the 8 converted and flipped, which usually means you're going to see a push up. What did we have happen on Friday? We opened at the low and we closed at the high, right? It doesn't get more textbook than that. And right here, 318.11, where did we close? 319.94. So we triggered. These have triggered. You have to see where they open on Monday, but this KLAC and LRCX, Lam Research, they've triggered already. And your first stop here is going to be this 342 level. But when you get through that, right up here, okay, where you're going to fit right into is this. You're going to go right back, and you can see where I'm going with this with these channels, right? Look at these channels. I mean, you could be heading up to this area, this 380, 390 area. And I think this is really important to note what's going on here in this collision. So I think that these are just getting started, and you could actually argue that this is the right shoulder, this is the left shoulder, and this is the head, and it's going to flip. So it's an inverse head and shoulders. We don't really have to get into that. But if you look here, and I'm not sure if everybody can see the lettering on these, so I'm just going to keep typing them in. So, and I'm looking forward to going through and talking about like the absolute carnage that happened in these Chinese names and why it happened. But so what you're seeing here is you had a wedge and you broke out of that wedge. Right now, let's just overlay this a little bit more. Right, all we need is price. It's really all you need. I mean, we can put the bells and whistles in, but once you understand price and volume, your trading will go so much better. It'll be so much smoother. So let's put a little arrow on this. So here we go. So see how your above average volume is curling now? And you know what? Maybe we need to, let me see what we can do here. Okay. So let's go to this volume lower, and let's change this color to that and see if that makes it better and stand out more. Yep, now you can see it better. So see how the yellow, see how it's curving? See how we dried up and now we're curving up? This is exactly what you want to see. And you can see this channel here and how that could take us to the 375 level. So that's another one that you need to put these on your list. This different space, and I just want to preface this. If the 10-year, and I'm going to go over the 10-year as a possible trade, and the 20-year bond as a possible trade, because there's some divergences going on there. Now, if the 10-year comes in on yield, meaning if the yield drops, you could watch these kinds of stocks get absolutely hit. But this is exactly what you want to see, right? This is, let's just draw this support here. So here's your support, here's your resistance, and we should all be able to see this base. Top is the resistance, below is support. And at the end of this video, I'm going to link a training video so that people can start learning the basics of some of this stuff for beginners. So see where you're at here and how you're hitting this line, and then you flip it. That was it. So in other words, people that follow me on Twitter and get the newsletter, they know that I call these boomerang trades, because you undercut and then you flip back over the support line after you shook everybody else out, and then you run. Now that you understand that, you throw in the bells and whistles and see what else that can tell you. You can get any more other features right. So you undercut the 50-week here, and then you jam up. Now look what's going on. All three of these converging. The 5, the 8, the 21-week, all converging and crossing. There's some people that will only trade a 5 and a 21 when they cross up. They won't even do the 5 and the 8. So this is showing tremendous promise as well, Home Depot. But again, if the 10-year starts to come in on yield, these could come down. Just be aware of that. Also, this is kind of a sleeper, but this is kind of interesting. Let me go to here on this, and let's shrink this down. So, software overall doesn't look that good, but there's a lot of things going on here that are very interesting. And let's just get all this in here and see what's going on. So then we'll shrink this down a little bit. Okay, perfect. So what we're going to see here is, and this is on a daily chart. You see this 5-8 crossover? I did that indicator platform before and how that works. But look at this volume at the end of the day on Friday, and look how you jumped. This is some of the best volume that you've had since this date, since January 4th. This is the second highest volume of the year. Nobody's talking about it. No one's talking about the open, right, being the low and the high, right, going right to the 21-day. Now, there's another little thing that happened here that really intrigued me. and people call them all kinds of things and all kinds of names, but see how you opened above the high of this bar? So the high of this bar was 218.71. Okay, the high of this was 219. Okay, or the low of this was 219, and the open was 220. So that whoever didn't buy this day, right, and was going to wait till the next day, now has to chase it. This is just human behavior 101, right? So look at where you stopped. You stopped right at the open of this bar, which is where these people were in when they tried to catch the last bounce. But look what we have going on here. Let's just draw this in real quick. Okay, so you can get this. So this was the bottom, then we rallied, then we undercut the bottom, right? People sold out because they gap it down lower than here off the open, and what do? They jam it up and it runs. And now it's starting to break support lines, the resistance and support lines, just like we talked about. So what you could wait for are a couple things here. You could wait for this to get to this 250 line and see if it flips there. These other lines up here right now, we don't really even need to focus on. They're so far out. There's one we're going to leave. We're going to leave this one because of where it takes us. I remember this line. It takes us right to the 319, which was the peak of that day. So what you're waiting for here is just very simply this line right here. See this 241.55 line? See how 1, 2, 3 times we hit it? You can actually go all the way back to here and say it as well. 4 times there, maybe even call it a fifth. You flip 241.55 and people will expect that flip to push, and then people are going to say why. Why would you expect that? Because if you look at this channel, right, peak, 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 you've not had one close even here. Okay, let's just go through it so you understand why. You have not had one close, even though you're up here, that's higher. Not one that's ever been higher, right? So if you get a close higher than a previous peak, you'll move. Now, the other thing that's interesting about this and that you should take into account is the volatility of the move. Even though it's a down move, the volatility has slowed excessively, right? You see these wide swings, and then they get narrower, and then they get narrower. And that's exactly what's happening here. So this is somewhat contrarian, but I would look at this 41.55, 241.55, and see if you can flip this, and then you want to flip this downward trend, 265, and I think you can get to this 319. I think this could move. It has potential, and now you have this huge base behind you too. Whoops, moved away from me. So that's another one for you to consider this week coming up. And this is in the same space as Home Depot. Some people love these names, and they do look good right now. I mean, there's no question about it. On snow, just FYI, there's really no reason for us to even get into moving averages. They're irrelevant when the stock's down like that. It's not really going to be overtly helpful. No one's really looking at it. So here's the 179.44 that we bounced off the 8-day and then broke out and then continued. Now, what I like about this one, look where you're at. Okay. So see, you're right at the top of this trend, right? You're right at the top of it. And what's that going to do? And you can even see the other trend line right here. You can even see this one. Most likely you can see it, but let's just draw it in. So, and as I always tell people, don't, if you're having trouble with trend lines because you see how I'm doing them, please reach out. I'll help. But I've been doing it for over 20 years, so it does look a little, some people say, why is it there? Why is this? It just takes time to get used to it, like anything else. But you see how you're hitting here, bonk, bonk. Now you're up here. If you flip this, you're going to run. And let's just go through this. So this has just been an absolute monster of a stock, right? You see all the volume that's come in here and how we rode the 200-month moving average. But look what we've got going on here. After this massive sell down, which we had, in March, where we went, basically cut in half, bounced, rallied up, and now we're looking at a monthly. But look at how this is setting up. Okay, and if we close here, this is the all-time high close on the stock off a bull flag on the monthly. Like this kind of trend doesn't go away in a week. And again, this is lows. So, I like both Home Depot and Lowe's. This to me just seems like it's got way more oomph lined up for it. And you can actually see, and I'll draw it, because you can actually see how we already flipped the monthly channel. Right here was your monthly channel, right? And you flipped it back here. Hold on, let me just overlay that. Okay, so you can see how it was here, and then you broke it here, and then consolidated above it, and now boom. So these are setting up. These are setting up for nice moves. UPST was one that we were in before trading on the on Twitter. Just making live calls on it. Off the open at 83 and then 105. And if you don't follow me on Twitter, you might want to, because I do throw out actionable calls. There's a link in the bio. But let's get rid of these bells and whistles for a moment, get rid of the indexes, because I really want to focus on this before we jump into the Chinese stocks. Come on, there you go. And I'm just going to leave the arrow for time's sake right now. We can get rid of it, I guess. Doesn't really matter. Okay, so you see this little line down here, this little trend line, and how we respected it the whole time? Boom, boom, boom. Then what happened? You reversed and you broke up. We look like we're ready to flip this. We look like we're ready for the final move on a push on this one. And I like how the volume is just not even non-existent, and we just happened to move, 20 points. So we really need to watch this 153 line. But if you break this down on a smaller time frame, okay, you're going to find different points. And let's get rid of this. And we'll get rid of this because this no longer is relevant. So this is where you're at since the breakout. And you can see this 105 level is substantial, right? That's your real support. But there's a couple other key levels here as well. This 124, once you broke that, you notice what happened? You didn't break it again. That became support. Now this line flipped. Right? You're right here. Right? See this breakout? The next hourly breakout. Couldn't do it. What did we do? We broke it. So we cleared 142. So essentially this is setting up for a swing to that level. So really by drilling down, because here's something you have to understand. When you have a breakout like this, your entire chart changes, right? Once you're through this 105, your entire chart changes. Everything that's happened in the past, all this is immaterial. This becomes your focal point. What's happening now? So you flip the 105.80 level, and now you head up, right? And you couldn't stay above the upper trend line. You come back down, test support. Now you're going to try it again. Maybe second time's the charm. But what you want to focus on is, now I only have 1, 2, 3, 4, 5, 6, 7 data points, right? You can't really make a decision on 7 data points. So you go to a smaller time frame like the hourly for this UPST, and it will help clue you in a little bit on what you should be doing. Now, with that said, let's just take a look at this. 128.80, 141.47, we flipped to 142. This is a breakout, okay? This is just a textbook breakout. What I would look here, if you were so inclined, is you could actually buy it on a higher high push, which would be a 145 or better. You get a 145 or better, and you close below 144, 140, 147, this could be your stop. Or you could even use the low, because you see this? Look, here's your flagpole. Here's your flag. What did it do? It broke out. So I have a high tight flag right at the support line that broke on the hourly. And you can see this, right? Let's just draw this. Just give you another bell and whistle. So you can see what's going on here. So you could even, if you wanted to stay in it and have a looser stop, you consider using the low of the day, 138.50. Because if you break 138.50, it would also mean you close below this bar, which you don't want to do now. It means you're going to come back down and test this lower trend line, or you're going to test the 124 support again. So I really do like that trade. And I want to get into the other one from the newsletter, the one we made 10% on Friday in a moment, because I still think there's tons of room left in that trade for people that don't get the newsletter. And the newsletter's free, and it is in the bio. Simply click on the link, and it comes out 3 times a week. So this one hasn't moved yet, and this tends to happen. So for whatever reason, when it comes to equipment manufacturers of semiconductors, and I've been trading them for over 20 years, I don't understand for the life of me, and let me just show you this on the weekly, right? Like you can see where I'm going with this already. But I don't understand for the life of me why this happens, but it always happens. Taiwan Semi always lags. For whatever reason, I have no idea, but they always lag. So this is actually setting up to move, and it's not as extended as the other ones. So it really depends on what kind of trader or investor you are. So here you are on the daily, and you can just see the price action. And I just want to show the price action again before we get into the bells and the whistles, okay? So this was support. Okay, this was your bottom. So again, you have a double bottom here. Well, where is that double bottom? You were here, right? You broke it, okay? And then you broke back through this. This is a confirmation move. So I'll say it again. This is a bottom, right? We rolled, we broke that bottom, and then we flipped back over that bottom. That's a double bottom, and this is the confirmation move of that double bottom. So if you have questions about that, and I got a couple on the last one, just message me and I'll walk you through it. 121.27, okay, is the top of this range. I don't know that you want to wait for that or not, because you can see this little flag here. Now let's just see if we can get some more clarity on what to do by what's going on here before we get into the Chinese names. And I do want to go through three indexes really quickly, actually. So you get to 21. You flip 21, right, which is right where the Bollinger Bands line up anyway, and you're going right back up to here to this 126 level, and then I'm above this. So you really want to flip 121 at this point before you buy it. You know, if you don't want to wait for the 5 points and you want to buy, you have to buy the higher high bar and use the lower the previous as a way to get out. But this is really setting up. Now, if we get rid of all the indicators for a moment, just to show you this as well, look what happened. You can see it, right? It's a clear breakout from here. It's a clear downward trend breakout. So this is setting up as well, and you don't have the same move. It is a little thinner to trade, but your target area to start, you're looking up here, 150. So, and then, you know, this one, let's just get into X, and then I'm going to get into these two indexes. So this is the one we threw in the newsletter on we put this in on Friday, and I walked through the trade yesterday and on Friday's recap. You know, we broke this little wedge right here, and where we opened was perfect. And then we backfilled down to here, and then we just ripped. And when we did that, it clued me in that I needed to be involved, and I'm going to throw the indicators in. And here's one of the couple key things. We went right to the 21-day and then bounced off of it. It's a clear indication of strength. Notice how you couldn't break the 50 on this. Now, we know there's a $3 trillion infrastructure bill out there. If it gets scrapped or something, this will come in. But now we're set up to break this high level. Now, I don't think this trade's over if you're not in this yet. So really, look at this this 24.24 level. At $23, which is where it closed, I'm not saying that buy it for $1 level. You can see where the 200-week was, right, and how we held support there. But I'm not saying buy it for $1. I'm saying if we flip this level, you're heading to $37, $38 over time. I mean, that's the next level. So that's what I would take into account. So they're the top stocks that I would look at next week. I do think there's a ton of opportunity in these Chinese blowups now that we have a better understanding of why they happen, which I'll address. But let's just point out a couple key things that are going on here. This is, if you were ever interested in playing the bond market and what's going on here, let me get rid of this. This is the time to do it. This is the 20-year. Okay. And you can just see, you know, they threw the baby out with the bathwater, right? Like we just got crushed. But I just want to show something. So this is March when bonds got absolutely crushed, right? So here was your support line right off of this, okay? And what happened? We bounced and we're trying to get over it. Now, if we can get over this on the daily and the 21-day, and you have a 5/8 moving average crossover here, this is going to run up to this 144 level, get through that, and you can get back to this 155 level. So this can revert. Now, what I would just point out is this, okay? If you look at this chart, you just went right to the 200-week on the bond. Like, there's no reason for you to be at the 200-week on the 20-year right now. Let's go back a little further so you can understand this a little bit better. So this is a monthly chart on what's going on. Okay, so this is a multi-year chart on the 20-year bond. And what you're seeing is you undercut 138.50, right, which is support line, and then you bounce right off your 50-month moving average. I got TLT everywhere. And this is just cascading down. Once I get through this 138.50 again to the upside, I can easily bounce. And I'm going to walk through this. I think I'm going to do the Bollinger Bands as a tutorial today so you can understand how to use them to trade or little trading strategies with them. But you see how you come down here on the monthly? Okay, you never get this far. You got this far in October 2018. You got this far here. Like the idea of getting there, and you can see how wild this has gotten. This is not normal width for a treasury bond. This is pretty much insanity. So you can see the width, right? If you go through the width of that, that just shows the increase in volatility. So the idea of a snapback to a reversion of a mean is probably most likely. Now, what would you use to determine when that's going to happen? You could just use the 10-year treasury. And these are all notes from before. And let's just click off these Bollinger Bands because we don't need them right now. We're going to use them more in a moment when we cover the Chinese names. So what you're seeing here, right? See how you're coming in and this 5-8 is crossing? And this 21 starts to look like it's going flat. You have a little higher here. Then you couldn't break out, get above it. Now you're starting to test these lines, breaking them. You just be careful here if you're on the other side of this trade, because this is exhibiting patterns of here's my trend. And you should be able to see this, but let's just draw it real quick. There's your trend, right? Now you're going to flip here because you can't break it to the downside. Now look at what's already happened. Let's get rid of the indicators here just so you can see this. Okay. Okay, they have to be the same trajectory or you don't have a channel. So this is the upper channel that's been rejected, rejected, rejected. Now we're not getting to that any longer, are we? Right? Now we're starting to test this level. This usually means that we may roll and come back down and retest the 155. If you see that TLT, if you see a move like that, this TLT could move 10, 15 points on a move if we go back to 155 on the 10-year treasury. So that's just something to consider. And, let's go through the, I'm going to go through like the implosion that happened so people can understand what's going on here. So first is, and I stated in Friday's video, we can get rid of this, that trade's over. As I stated in Friday's video, one of the key issues is when a fund blows up, people are saying, how low can stocks go? When a fund blows up, and it apparently is this guy, Bill Hwang, that used to be a Tiger Cub, trading his prop money. It looks like it was about a $10 or $15 billion fund that blew up, and he was like maximally leveraged. So that's what's floating around right now. There was a ton of dumping from on Goldman Sachs's desk. So what you see happening now is you have this trend line, right? And you've shattered it, okay? And we're going to get rid of all these segment lines. So you just absolutely shattered it, but look here. Now, I'm going to change the background of the screen for a minute because we're going to walk through Bollinger Bands, and then at the end of this video, I'm going to do a quick, simple tutorial on some basic ideas on how you can use Bollinger Bands to trade. So I'm just going to throw this white in. That's entirely too bright for me. So let's just do something like that. That's not going to work. Now let's see how they look with this. Yeah, we're not going to do all that. We're going to have to do that. All right, let's change these real quick. Okay, perfect. And let's get rid of these. So what you can see here, and just to understand what a Bollinger Band is, this is a second standard deviation move, meaning the volume to get to here is basically 2 times the average range that it would happen. So when this happens, this is pretty substantial stuff. And you can see how you're wedged in here right now, right? And how you're riding this line. This one is interesting, but it's not the ones that I would start looking at right now. FinTech really came in, and you see how you have this level up here. Looks like we have 2 of these. We'll remove that one. So you can see this 24 level is really important on QFin. So if you were looking to buy this, 24 is what you need. I got rid of all the moving averages because this is really a volatility play. I mean, that's really what you're looking at here. That's why it came in. And as I explained to people earlier, it's not about what the company's worth. When a fund is liquidated, and I gave an example yesterday of Sienna being liquidated in 2000, it went down 70% in a day. Okay, when a merger doesn't go through, all the ARB guys have to unwind those trades. They go to levels that they just puke it out. And most of the time, they don't even have a choice because the institution where they prime their accounts makes them do it. So let's just start looking at these. And this, it's interesting because this does fit the thesis of what may be going on here with what was happening with FinTech. See how we have these Bollinger Bands and how you were breaking out of them up here. And then all of a sudden you revert to the mean. You can see where the mean is. Now you're back down here, and now you've made a higher high. This one is actually interesting of all of them. And Tiger's a little interesting too. But see, if we can flip this 218 or 118 line right here, that would get us over this hump, over this one. Here's your bottom. Here's your double bottom. Flip over that line is confirmation of the double bottom. Now you're going to 132. So I'll say that again. And this is how I would play this. And I have not played this yet. With these kinds of trades, you want to be not the first one in the door because they can gap down the next day. You could think the selling's over and it's not over. You're better off paying attention. The people you're trading against are sitting on an institutional trading desk. And if they think the selling's over, they know what's going to happen to them, that they're going to get run over. They're not fools. So you have this 118 level. Flipping that 118 level, closing above a higher high, would push us most likely to this 137 level. And you're in this trading range still. So you still are not out of the wedge, and you can get up to this level and trade it that way. So that's, I think, that makes the most sense if you were looking at FinTech, this one. And I'll do Tiger real quick. Tiger, I thought on Friday we were going to be okay. And I'm going to go back to... see this background a little bit darker. I like this a little bit more for here. So what you're going to see here, right, is the undercut of this trend line. And you undercut here, and then you bounced up. You need to get above 1932 to technically confirm your double. But that's going to get you right into here, right? To confirm your double bottom, I'll say it again, you have to get to 1932. And that would mean that I have to get up here. And that's going to take me right to the median. So that's not as juicy as the other trade. But let's go to the one this one was the strongest move of all of them. Again, when they liquidate, they don't care. And what I'm going to say here is I don't need to be first. I understand that people want to buy the bottom and they want to get the best price. I just want to make money. And if that means I have to wait a little bit, then I'm fine with it. I've been around a long time doing this, and I can assure you it's worth the wait. So, you could come in the next day and this thing could just gap down to here because they have to do another secondary. You don't know yet. We're still putting the pieces of the puzzle together. Here's what we do know. And we're not going to need the 5 or the 8 on this trade. We came right to the 200-day. We had enormous covering, huge covering, and we closed at the high of the day. Okay, I'm still out of the Bollinger Band. I really like this trade, if you can't tell by my voice. I'm out of the Bollinger Band still, right? And I didn't have to risk if it went from 175 and broke that to 150. I didn't have to play that game, or is it going to get halted, or what's going on? You just don't know. So you have to be really careful. So what I need is just an opening of a higher high And you could revert. And again, I'm going to say this: when they snap back, these are volatility plays, and that's why it's important to understand Bollinger Bands. You can snap back right to this line. You could snap right back to this Bollinger Band line and still be in your downtrend. See your downtrends right here, and that's 60 points. So this is a pretty solid move here, and this is definitely one of the ones that came in that I would put on my radar. So if you look at IQ and what happened, and I was pointing this out on Friday. I'm going to remove this for a minute. We're going to get rid of these Bollinger Bands because I think this is important stuff. Somebody bought this breakout. And I hear some of the younger traders that are inexperienced traders because it hasn't happened to them yet. If you trade without stops, you will stop trading. It's just a question of when. It's not a question of today, tomorrow, it could be 5 years from now. But if you don't implement a stop process, you don't have a process. You have a wish and a dream. So see how you're bouncing here? So anybody would buy this. It's really going to go this time, right? But your stop has to be the undercut of this bar. If you didn't use that, you just dropped what? 50% in 2 days. So I think that this pretty much hammers the point home on why you need these lines and why you need supports, why you need stops, and need to know where this stuff is. In regards to buying this one, I would not touch this with a 10-foot pole. You can see how we sliced through here. We couldn't get back over the 200-day. We couldn't even bounce on Friday. You basically are holding this line, but you really didn't bounce, and we stayed red. So this is not one of the ones that I would be jumping back into. Right now, of all the trades I've shown you, BIDU is the best. Now, this Tennyson is interesting too. Notice this volume line. Notice how that volume line looks like one of the other ones, doesn't it? Looks just like this, right? What else does it look like? Look where the 50 or the 200-day is. And I got rid of the 5 and the 8 because they're irrelevant right now. Now, we know by looking at this, and this is TME, and this is another one that should be on the top of your list if you're looking for it to play this bounce, because this could really move. I mean, this could go back up 7 points fairly quickly. And you don't want to, if they overgap in the morning, you don't want to chase them. But there's real potential here for these. Let's throw these Bollinger Bands back in. See how you're at the, look at this. You went right to the high of that Bollinger Band and rejected. And now you're here. So look at this. Yeah. And so once you get to this higher high level, this 21 and a quarter, yep, let's just call it 21.20. When you get to 21.20 and you get back into this, okay, because you're out, you need to get back in, and I'll walk through it in that video. You're heading to this 26.27. You're going to revert to the mean of this move. Follow me? So that's really important. This would definitely be on your list if you're looking to play the bounce. So again, here's another one, VIPs. Notice how you bounced and you didn't get back into this level. Now, out of all of them, the strongest so far is BIDU because of how it closed. But you have the same pattern here with the volume and it coming in. And just, I got to be involved. But we still did not flip back into the band. So you need to get back in there and watch this. I wouldn't chase this one yet until it does that, until you see that kind of move back into the band. So, these, whoever owned these must have been in the same exact trade. That's all I can think of. And I actually think they may have been in fintech earlier, and this is what transpired. But these are legitimate companies, and you see how far I am still out and couldn't even rally at the end of the day. This is not a rally, guys, from 35 to 42. I mean, if you want to play that game, go for it. But you could just as easily come in on Monday morning and see a secondary at $33 to clean this up. It wouldn't be the first time it happened. So you really got to be careful of that. But what we're looking for is we're looking for this to push up. Now, if you don't want to wait for you to get to this level, you're going to have to drill down into much smaller charts. You're going to have to go into something like this and start looking at hourlies and seeing how you could play it from there. And frankly, with the way that this is down and looking like this is not one that I would run into yet. Out of all these long-term, for my long-term account, I would buy Viacom and Discovery, and they're just not ready yet. These are actually setting up to form rising wedges and roll. And look at this. This is the hourly on that. So we didn't even get it. We didn't even get a higher high bar. So I would just be really careful. I think that I know people that were buying these on Friday, and I get it. Like, I'll buy it here, and this will be the stop. But you're catching a falling knife. You need this to trade to a level that's substantial, like back in the band, because I'd rather be in the band and own this at 54 to 80 than buy it here and try and catch 4 or 5 points, right? Because when these snap back, and they do snap back, if you look at this, that's when you want to be in them. And let's just go through Tiger. We just don't know if the guy's completely blown out yet. So Tiger, you have this wedge, you're holding this wedge line, and you're holding, and we'll go through this real quick. You're holding the support level as well, and you're on the back of the band. My issue with this one is just I have to get through this level. I have to get through the top of this bar, the 19 level, and that really takes me to here. So the real juice in FinTech, if you're looking at playing it, is going to be FUTA. And it's acting the best of all of them, bouncing off of here, FUTU, and the way that it's heading back to here. And it still gives me juice up here, 20 points before I have to worry about, risk versus reward and looking like that. So that's pretty much it in a nutshell. If you have any questions, as always, please message me or comment here. I'd really be interested to see, especially the Chinese names. If you could let me know which one of these you think has the most potential to bounce, I would appreciate it. And as always, please like the video because I'm trying to get in front of as many people as possible to show them what it truly takes to be successful. Thank you very much. Enjoy your weekend.